Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, we've been talking about how there's a lot of movement in the broader market. So let's talk about one of these stocks which is doing well in trade. Shriram Properties is the one that we are talking about. It reported a good quarter to FY24 earnings. Sales volumes and collections zoomed nearly 48% sequentially. Company remains confident of its second half launches. To discuss this and more, M Murali, Chairman and Managing Director at Shriram Properties, is joining us now. Mr. Murali, good afternoon. Thank you so much for joining us, and festive greetings to you and everyone at the company as well. Well, looks like your quarter two numbers have been really good, but I wanted to understand what is second half looking like. You speak about good launches. So tell us about the launch pipeline and what is the growth that you're looking at overall in FY24 when we talk about volumes and sales value as well.
Thank you. Wish you all very happy, prosperous Deepavali and New Year beginning. And this is the second Deepavali for us post-listing. We have been enjoying good support from the market, and we have been enjoying good support from the customers. Overall macroeconomic situation is pretty good. So country is in the right direction and right hands. So we are making tremendous progress. As you have seen since listing, quarter on quarter, we have been delivering good results because of the macroeconomic conditions. So as you have seen, H1 also we delivered some good numbers, and H2 also looking pretty good for us. And I think we will beat the estimate whatever we have provided to the market for the full year. That's where we are now, based on the macroeconomic situations today.
But would you like to provide some number in terms of what we can expect for the full financial year? If you could give us some estimate of what you're targeting at least.
As you have seen, H1 we had about 1.9 million square foot sales, and our full year budget will surpass 4 million square feet. We are looking at close to about 4.5 million square foot pre-sales, and we should be able to comfortably pass through. As you know that normally H1 Q1, Q2 will be little less compared to Q3 and Q4. Now that festivity starts now, so you will see a tremendous growth potential. So hopefully we should surpass our estimate and come in close to about 4.5 million square feet pre-sales. And not only that, we delivered about 800 plus units, 830 units in H1. Our full year target is about 3,000 units delivery. The projects are all in good shape today, and delivery is on track, completion is on track. So we should be able to deliver 3,000 units for the full year, or 3,000 plus. That's where we are now. We are talking about launches. Sorry, go ahead.
Okay, no. So you are confident of achieving the guidance that you had given earlier. I want to understand if that will be driven by higher price realizations as well. You've seen first half of price realizations, which is higher than what you saw in FY23. Is there more room for price hikes? Because some of the players are talking about stabilizing prices in the real estate market.
See, now we are also heading towards the parliament election, general election in the next 5-6 months' time. So hence, people could be very conservative, but I'm extremely bullish. This next decade belongs to India, and I expect business to, nation to grow phenomenally well economically, and as well as business to grow. And specifically real estate, I expect a very big growth. One hand. On the other hand, consolidation is deepening further and further. As you've seen, H1, we have got 14% price increase compared to last year.
Yes. I was just going to get to that. That if you can give us the precise number, that what price realizations have you seen in the last year, and how much more will you be able to get in FY24?
We have seen about 14% price increase compared to last year in the H1, and this is likely to continue. May not be 14% for H2, so could be another 5 to 8% price increase possible in H2. And post elections, we could see a much bigger jump. So this is where we are gearing up now.
Okay, that is on the pricing. Interesting to hear that. Mr. Murali, we want to talk to you about the debt levels, because I think the gross debt is at around 530 crores. So that continues to be quite high. If you could just split it up between what we have for NBFCs, what we have for banks, and what is the cost of this debt? What are the plans to, just with respect to debt, are there any plans to pare it down? Are you looking to add more? Take us through some details on that front.
Our debt equity ratio is about 0.35 now at this point of time. This is one of the lowest in the real estate industry. I think we'll be in the top 3 in terms of debt equity ratio, in terms of lowest level of debt. we look at bottom front side, we'll be in the third in the country amongst the listed players. And it's about 430 is the net debt and about 500 is the gross debt. So as you've seen that, a lot of projects are getting completed now. This next, 6 to 9 months, we deliver about 6 million square feet. And that generates a lot of cash flow for us. We are likely to generate close to about 300 crores of free cash flows in the next 2 years' time. So all that will help us in reducing the debt. And all the debts are related to the construction finance. So as the project gets completed, those debt gets paid back. So we expect by FY20 25, we should be having a significant reduction from our position, maybe at least 50-60% reduction from our current position, and it keeps going on further.
Okay, Mr. Murali, your debt reduction plans are something that the street is watching out for a long time as well. So that is something that we will track very closely. Wanted to understand what are the collections and cash flows looking like, since you're talking about the construction cycle reaching a certain level. And with this economic interest that you've bought in Shriram Park 63 from Mitsubishi Corporation, what will it do to your cash flows? Because there will be some outflow here.
Yeah. So collections have been really good, and compared to last year H1, it's about 13% increase this year. We had H1 collections about 721 crores. We are likely to end the year with about close to 1,800 crores of collection for FY24. And in terms of Mitsubishi, as you have seen that, project has done phenomenal success. As you know that Mitsubishi has been in the market for the last about 5-6 years in India, and they chose to invest only with Shriram Properties so far in real estate space. So they haven't invested with any other real estate companies so far, and they're pretty happy with the return what they got. The project has done phenomenally well. So we are likely to generate some good cash flows. So we'll use it for new business opportunity. As you know that business opportunity is phenomenally good. We will use it for the new business opportunity, new investments.
All right, Mr. Murali, we will leave it at that today, but thank you very much for joining us and taking us through your outlook, where you really see things headed for Shriram Properties as well. That is the management telling us that they're looking at around 4.5 million square feet in terms of, the sales volume for the full financial year. And they're also telling us that the price hikes could be in the range of 5 to 10%. We are going to get into a short break, but on the other side, there's lots more that we are tracking as well. And as we get into the new year, as part of our Samvat Centimeter, we at CNBC-TV18 polled a whole host of market veterans. So we're going to bring you the details on what they think markets will do in Samvat 2080. Stay tuned, we'll be right back.